Hey folks, it's June 1st, 2020. The time is 3:37 Central, 4:37 Eastern. The markets are closed right now. Uh, I'm adding one more slide so that I can explain the CITs and how they work because there are a few new members. So the key things to watch here are the sixth degree polynomial, which is the dotted line, and the actual intra-week neural, which is kind of the purple line. And by the way, you have this in Excel. The colors might be different, but this is the Monday tab. So the polynomial is troughing here, and the price is peaking here. The time is about 3 a.m. We're getting a top here, and because the price is peaking, then we gotta follow the polynomial down. This is actually moving down into 6 a.m. and the crossover here reflects the trend change, and basically we start following up. We get a retest at open. This is pretty customary between 8 well, let's say 9:37 Eastern. I tend to think in my time zone through 10:10 a.m. Eastern. So the early morning CITs are invariably retested um, in that opening time frame. We get a successful retest. You see it's riding the polynomial. Now from here, if you look at the time series, just focus on the purple line. The time series is moving higher pretty much all day. Not to say that this is how it will behave, that it'll keep going up. So that's why you have to be careful around the CITs. The crossovers between the actual neural line and the polynomials, they reflect continuation CITs more than 90% of the time. So what it means is, since it's a continuation CIT, it's like another checkpoint. Hey trend, hey uptrend, am I okay? So you retest the polynomial at that point. This was 11:45. It came in a little early. And once again, the divisions are roughly 58 minutes. So I basically visually spotted this as 1/4 of this duration, and I went with 11:45, and it actually came in at 11:28. So we get a successful retest. The series is moving higher. It moves higher, but here you can see inversion starts to happen. And 2 to 3 is slightly down if you notice. But what happens is you get a 305 high. If you recall from the chat, I said because of the 115 PM pivot, the trend was higher into 305 with greater than 95% probability, and we stayed higher into 305 or somewhere around that. And then look what happens here. This series is pretty uniform and it shows to be moving down, but now I'm spotting an inversion here at close. So hopefully this kind of helps you understand the kind of things I look for, and it'll be great if you guys start reading these CITs as well. Feel free to post them in the chat. Nobody's judging you. When I hop on, I'll provide you with the CITs the way I see them. But at least that'll make you better to put it out there. Okay, looking at the markets, I have to say they are getting treacherous. Okay, I can feel it now. So far, I had no hesitation to bring us up from the March lows, and but now I'm starting to see kind of a little bit of cracks. Nothing major still, no failures, but let me show you what's going on. So, from the timing calendar, we had a 5:30 high, and we obviously got the back down from the highs to the Sunday lows. Now the time series is flat. Typically, what that means is flat series means market will just range trade and keep hanging there, right? Because the trend was up. Um, if for any reason, and this is a possibility given the inversion that I'm seeing at close, if we follow the blue line and we move higher um, into June 4th, or even like strongly higher into the June 2nd, 7 or 2 p.m. CIT. So let's just add one more potential path. It says 6 to after hours. So if the blue or purple plays out, the market may actually be approaching the the um, the price top. Okay. The other path is like I was originally predicting on Sunday. Basically, we drop down into Tuesday. I think it'll max drop down to 30.23, and I'll show you why. And then move higher into 6.4 or 6.5. So the point becomes the top may arrive here or here. I don't know which one it's gonna be. At any rate, if you look at the strength of 6.5 CIT and 6.15 CIT, it's exactly the same. So this actually is the quadruple witching day or the OPEX day. And so I do expect that markets will continue hanging and retest the highs at OPEX. But look what starts to happen in the middle. The strength is lost, flat series, and then down into 611. So basically, the market strength is winning, and it's just like February, if you recall. We got a high hit on, I believe, on February 12th. It hung there for another week into 220 before the historic crash began. We're once again getting to a point where you know I would suggest that we start to fold long-term exposure. Um, just because we are in these weird times, and my prediction is we most likely don't break the Malos, but who knows? And we can always catch the bottom again in July. So that's my recommendation to kind of watch out how you want to play this. It's really your call, but I intend to go flat on longs. Okay, so looking at the technical models, and just to eliminate what I think will happen, right? We have a failure on the hourlies today, which typically means an after hours decline. However, I am leaning towards ruling that out. Normally, I don't overrule the technical models. I'm ruling that out because I can actually spot an inversion at close. And the only way to prove that is for market to actually move above Monday's highs. So if that happens, then there's a great chance that market will continue higher following the purple path or the blue path. So um, let's see, let's head back. So we have a failure because the close is weaker than the PM pivot. So that's kind of the only breach. But the higher degree waves are still poised higher. So the market should keep holding, whether or not it gains price or not. It's hard to say. Looking at the Elliott waves model, until we can surpass 3075.04 SPX, I think -4 for the June ES spread. Um, Market is essentially churning between 3023.88 and 3075.04. So that's another thing to keep in mind. If we were to strictly stay technical, then the technical model says there is a failure on hourlies. The next support is 3048.82. If that goes, the next support after hours is 3040.58. If that goes, then most likely the daily wave is going to support. That also happens to be the pivot for the weekly wave. And obviously, this is too far off right now. And all of this in an attempt in June to actually make it to 3159 pivot somehow. It's gonna be an interesting week to kind of get through. uh, People who subscribe to the long term for SmartP, either on the 3 month plan or on the annual plan, they know that I actually have a high happening, around here in this week. So let's just be careful. Okay, looking at the monthly VIX cycles, we are still riding and closing above the monthly wave. So I see the smaller degree waves fail as in today's close, but the monthly wave has to top out before the market turns. It was the same case in February. At the top, the higher degrees have to turn first, and at the bottom, the lower degrees turn first. So, so that's kind of the scoop here. So this still says, it's safe to blow off. I think the blow off still remains. Um, so once again, this is the unified model to kind of showcase what's happening on the daily cycles, trying to predict the candle for the next day, and obviously very, very important pivots. Everything you see here, it leads to successive failures or successive victories on the bullish side. So that's kind of the bull bear mob or pivot. 3042.07 now becomes the weekly pivot, so maybe we get a retest of that somehow before bouncing. And if for any reason the original Sunday cycle pans out, then we're going to retest 3020.55 before moving higher rest of the week. That's kind of the alternate. Um, as against what I'm thinking might happen now is break the Monday highs and continue moving higher tomorrow. Okay, and I have lowered the stops as plus minus 0.5% from these levels. I reduced it from plus minus 0.75 after measuring the success of the model at coefficient of 0.2. And basically, this kind of summarizes there is an important pivot tomorrow evening at 7:02 p.m. in general Tuesday after hours. So either we take the red path, which is the original Sunday path, or we scoot higher from today itself. And that's the reason I'm choosing that. And this is more of overriding the technical models, which I rarely do because I'm spotting an inversion in cycles at close. And also, in general, the dailies are higher from the timing calendar. And Alt B is because hourlies are on sell. So that's the update for Monday, and good luck.